Welcome, everybody. Thank you for joining us today. We are here to talk about one of our favorite topics, and it's those darn DPAs. We're going to be talking about overcoming DPA objections and misconceptions, diving specifically into five of the most common misperceptions and obstacles that we hear about when it comes to transactions involving down payment assistance. The purpose of this webinar is really to help everyone just feel more confident and comfortable when you're working with these down payment assistance programs. So we're going to have some fun. Maybe the topic might ruffle some feathers, who knows? But we're excited. Let's get started. My name is Will Medina from our DPR team. We also have with us today Keith Futrell, one of our DPA program specialists, Lori Johnson, our customer success specialist, and Melinda Harris, our director of marketing and communication. They will be answering questions in the background. So we ask that you use the Zoom Q&A feature to ask any questions and engage with them as we move along the webinar. We just find it's a lot easier to track and answer your questions there, but we are also looking at the chat. And of course, just a quick note, today's recording of the webinar will be shared with everyone. So as I mentioned, we're going to be kicking things off with a brief overview of the current state of down payment assistance programs. From there, we'll dive into the perceptions and misperceptions surrounding DPAs, specifically looking to tackle the five most common obstacles and objections that we hear when it comes to working with these programs. We'll be addressing those challenges head on, sharing insights and feedback from your industry peers. We're talking real estate agents and loan officers across the country who are proficient in down payment assistance themselves. They've helped us identify best practices to cut through the noise and clarify timelines. We'll also share some practical tools that you can combine with those best practices to help enhance your approach when working with DPAs. We always like to start with a quick bio. We are a national database and matching engine of all of the more than 2,600 homebuyer assistance programs across the country. Our team has decades of experience in residential mortgage finance and real estate. And most importantly, we've created tools for mortgage lenders, real estate agents, and multiple listing services that help enhance the experience and the workflow when working with DPAs. Ultimately, our goal is to help you bridge the gap and connect homebuyers with the down payment assistance they need. So I'd like to start with a quick overview of homebuyer assistance programs. We publish a quarterly report called the Homeownership Program Index Report, where we take stock of what's available across the country and look at developing trends. This is, like we like to say, a snapshot of our directory, really. So based on our Q4 2025, our most recent report, we found that of all the homebuyer programs available, 74% are some form of down payment or closing cost assistance. Within that, 80% offer deferred payments, meaning there is no monthly payment on the DPA loan for a set period of time. 53% are forgivable, either partially or fully, essentially turning into a grant over time. And 51% are both deferred and forgivable. On top of that, there are other DPAs that function as true grants at closing or as loans with monthly payments after closing. Now, I will mention that for a deeper dive into all things DPA, we highly recommend attending our DPA 101 webinar. We explore these programs in greater detail, including other options like affordable first mortgages, tax credits, and mortgage credit certificates. The webinar helps you understand how these programs are similar, how they differ, and what it takes to qualify. So, who funds and administers these programs? Every state has a housing finance agency. There are local housing finance agencies in certain markets across the country as well. There are city and county governments that often have community or economic development departments or housing authorities. Many employers, like municipal governments, hospitals, and universities, may also offer their employees some form of down payment assistance. You've got local housing authorities and community financial development institutions, which help increase local DPA options. And then you also have the Federal Home Loan Bank Network, which operates across the country through their member banks. There are a number of nonprofits like NeighborWorks and Neighborhood Housing Services and others that operate in markets across the country with varying programs. You also have community action agencies, community land trusts, and so many other organizations out there that are all trying to open new doors to homeownership and, most importantly, promote housing growth and responsibility in their market, which is essentially your market. And they all have funded and available down payment assistance programs. Now, we've gone through who funds and administers these programs. So let's talk about where these programs are available. And they literally are available everywhere. High cost markets, low cost markets, urban, rural. Every state has a housing finance agency, as I mentioned, whose programs are available statewide. And then lumped into that, all the local programs are available in each market. Now, income and price limits are also market adjusted based on median incomes and median prices in that market. So you see higher limits in higher cost markets. In the infograph, you can see the states with the greatest number of programs, but there is literally no county in the country where some kind of help isn't available. So let's talk about some trends that we're seeing with down payment assistance programs, and then we'll get into rethinking our perceptions. We see that demand remains through the roof. Providers are continuously increasing assistance amounts, income limits, and purchase price limits to help more buyers in today's market. Providers are also expanding eligible uses of their funds as well as inventory options. We continue to see new state and local programs that are launching in markets across the country, and 81% of all DPAs are funded and available. So there's so much more attention on affordability and down payment assistance now than in many years. So we mean it when we say that these programs are still available and are not going away. So here we have a breakdown of our Q4 2025 homeownership program index report. As I mentioned earlier, the index report, which is published quarterly, offers a snapshot of trends. And over the past few years, we've observed a net increase in the number of programs hitting markets across the country. It's also shown that 40% of programs have no first-time homebuyer requirement. 40% allow for manufactured housing. 35% allow for the purchase of a multifamily home, 2 to 4 units, so long as one of those units is owner occupied. 25% are statewide, but we're talking state housing finance agency programs. Most of the rest would be considered local. And about 400 programs offer extra incentives for, say, military service, certain professions, and so on. So now let's talk about down payment assistance. There are some common things we hear, especially from the lender perspective, but we'll be considering lenders and real estate agents as we go. So one of the things that we hear is down payment assistance programs add costs. There's no margin, and so that makes them unprofitable to originate. DPAs add a layer of post-closing complexity and risk. Again, from the lender's perspective, we're talking about getting loans off the books, sold, and onto a servicer. DPA training is hard to implement. There are some adoption questions like, will loan officers actually originate these? Will closing timelines be delayed because we've used a down payment assistance program? And most importantly, will the program run out of money after I've started the loan application? So when taking all this into account, what we are essentially hearing from many in real estate and finance is that they love the concept of DPA, but they struggle with the logistics and the economics of these programs. And so that's why we're here today, to combat some of these perceptions. We're here to essentially rethink our approach to and understanding of DPAs. In fact, we're going to give you millions of reasons to rethink DPAs. But first, let's go ahead and outline the five most common objections or misperceptions we hear about DPAs. The way this we'll go about this is we are going to acknowledge and discuss what the issue is, whether it's real or perceived, and then we're going to talk through solutions to these issues and or debunk some of them. So first, let's tackle inventory. We know inventory remains tight in many markets, but there are creative avenues that can help uncover more inventory options. Um, we know that there's some confusion about down payment requirements. We continue to see too many aspiring home buyers think that they need 20% down and are unaware of low down payment mortgage options or DPAs, thus leading them to often give up on the idea of homeownership. We know over the past few years, many sellers, or more likely the listing agents representing them, have been somewhat apprehensive about accepting contract offers from buyers using DPA. So we'll talk through that issue, then how to address it and deal with that kind of misguided apprehension. Another concern that's been around for many years is the misperception that all DPAs inherently extend, prolong, or delay the purchase transaction. So, again, we'll talk through how that's not often the case and how those misperceptions arise. Lastly, and perhaps most importantly, one of the biggest problems out there is the lack of productive and fruitful agent loan officer partnerships. We'll talk about the challenges we hear from real estate agents and how loan officers themselves can actually step in and help. So, our approach will be to present the issue, acknowledge and understand it, and then present solutions. And the solutions are what we've heard from your peers. Again, agents and loan officers around the country who have weighed in on these issues. So, all that to say, this is not made up. We've curated this specifically for you from your peers. So, with that in mind, let's dive into the inventory issue first. So, we know that supply varies. In some markets, supply has reached above pre pandemic levels while it remains below in others. Interest rates, of course, remain a barrier. This can suppress demand despite enormous interest in homeownership. However, we are seeing some assistance, right? As in, they were recently hovering around a 3-year low. Prices are softening or tightening again, depending on the market. And there are still certain demand factors that come into play. Many buyers are still competing for the same properties. For those of you on this call, we're obviously hitting the spring market soon. It's important to mention, of course, the sideline buyer that is weighing their options based on the current rate environment. And of course, people who purchased in the past few years waiting to downsize or upsize. So all of this, right, is wrapped into the inventory story. So what can be done? So we can consider alternatives to the open market. Agency owned or municipal owned properties and land trusts combined with DPA can be affordable options for first time buyers. Many local housing agencies or municipalities around the country purchase and repair blighted homes only to bring them back to market at or below cost, or even develop new properties meant to be affordable. There are homes that need minor repairs, which may give buyers the opportunity to compete and to afford a home that they can make their own. And just to be clear, we're not talking about, this huge hole in the roof, but those homes that don't get snatched up in the first week or two, maybe because they require a little more TLC, but they can offer a handy or motivated buyer another outlet for inventory. Something else is get to know agents that are listing affordable properties or even providers. Get on their email lists to monitor their coming soon offerings. It's important to get out ahead of the competition, thus helping you open new inventory options. Another option is manufactured housing, right? That can be an affordable housing alternative. Something else to consider is it's important to counsel buyers about what the process and competition will look like. Make sure they get pre-approved and probably take their home buyer education course earlier in the process. It also helps to partner with a housing counselor, very important, to help incubate and prepare new buyers. This will help you build a bigger, stronger pipeline over time. There's just a quick anecdote. One agent in Houston says to use what they call calculated patience, meaning narrow down the buyer's list of must-haves for their new home. So you're fully prepared to strike on a contract offer when the right property hits the market. It's important to be realistic about those must-haves and discuss those candidly while counseling your buyers. So let's talk about some of the confusion about down payment requirements. According to a study by the Urban Institute, this, although dated 2018, again, still resonates today. 65% of prospective buyers still believe they need at least 15 to 20% down for their home purchase. And 76%, according to the study, have little to no familiarity with low down payment programs, right? There's an education barrier there. Um, Home buyers aren't familiar with terms or requirements. They may have an understanding of debt to income requirements. As an example, how student loans are calculated. So, taking all this into account, these buyers will more than likely sideline themselves, right? Give up on the idea of home ownership. So, it's important to address a lot of these issues. Something else to consider is the impact that our marketing content and activities have on these buyers and the need to better educate these aspiring buyers to let them know that homeownership really is within reach and how to achieve that. So first and foremost, let's continue combating the 20% myth. It's important to aggressively debunk it, especially among first-time home buyers, right? We know 20% is not a requirement, and that's something where our marketing content can help educate them accordingly. Something else is to get outside of our bubble. We hear from so many realtors that they get into DPA because one buyer came along who needed help, and that led to a new path in their career, a new tool in their tool set, as they say, and most importantly, a heartfelt desire to help. So align yourselves with other agents and lenders that are working within that DPA lane. And also share the stories of how you've helped others with down payment assistance. That's great content, not just for your social media audience, but it it helps let tomorrow's buyers know what you were able to accomplish for yesterday's buyer. Something else is to make use of the educational tools that are available to you out there. One example would be downpaymentresource.com, um, or training classes from your state or local housing finance agencies, home buyer education classes. It's important to take the time to know and offer the tools that are available to home buyers. And part of that education is just being willing to talk about DPAs in general. And we'll talk more about agent loan officer partnerships, but loan officers can help you gain comfort with DPA requirements and open a path to helping more buyers. And listen, if you feel like this is not for you, that's fine, right? For one to kind of remain on their path. And if you're uncomfortable getting outside of that path, we do suggest, though, refer those deals out. But in general, a little bit of discomfort, I feel, goes a long way. So don't give up on those buyers, right? Let's learn about down payment assistance programs. Now, is it true that sellers don't like DPA contract offers? Um, has this been something that you've seen in your market, right? We know one bad experience can sour someone's willingness to work with a DPA program again. Sometimes the seller, or more likely the listing agent representing them, misunderstands the DPA program or associates one bad experience with all DPAs broadly. This is kind of what we're talking about when we mention some of the misapprehension with sellers that might refuse a contract that is using DPA. Let's remember as well that sellers need help framing the value of the DPA appropriately. Did they get their closing costs covered by the DPA programs? If so, agents help frame up the value of that to the seller. We also know that sellers, and again, their agents, want certainty and Fear delays and sometimes will associate the down payment assistance program with a lack of certainty and therefore a perceived risk of delay. So, what can be done? Well, realtors, it's important to leverage the experience and expertise of your loan officer partners, right? They can assist with setting the expectations with the seller and their agent. Leverage the value that a down payment assistance brings to a deal. DPAs could be framed as, "Hey, I don't need to ask you for closing costs because I have my DPA in place. So you're going to net more from this transaction. That is a value add. Provide assurance the deal will get done and done in a timely manner. That also means you need to know the guidelines and timelines for the program you're using for your clients. Again, that comes with establishing a really good agent LO partnership. As long as we educate ourselves and our borrowers on what is needed upfront, there is no need to fear delay. We also have to ensure that the consumer is on the same page as you. They should understand what is needed upfront so that they are able to be invested in keeping their home purchase on track. We also keep hearing from realtors around the country, don't disclose more than you have to. Put in the contract what state law requires, but if you don't have to disclose the source of funds for DPA, then it's none of the seller's business. And remember, ask a loan officer who does a lot of DPA well, and they'll tell you a DPA buyer who is qualified is still a qualified buyer. So up next, we're going to look at the huge misperception of DPAs extending the transaction. Anything during the loan process can cause the delay, not just the DPA. That's the most important thing here. Perhaps the loan officer, as an example, didn't fully investigate cash to close up front, or the DPA was added later in the process. Sometimes when a DPA is added later, people forget about that homebuyer education class that has to be completed. And to that point, delays often stem generally from a lack of communication amongst all parties. So, what can be done about this misconception? First, let's build our DPA IQ. Let's understand the programs that we're working with. What is the application process? What are the timelines? Is homebuyer education required? And so on. If homebuyer education is required, let's complete that early, right? In some cases, the class is good for 1 year. Let's also ensure that all other services are ordered in a timely manner. And this obviously involves coordinating with title, seller, lender. It's often not the DPA that causes the problem, but the DPA still gets blamed. Let's imagine a scenario where a buyer gets qualified, shops for the home, takes a while, finally signs the contract, but the bank statements have expired. So what do? We need to update bank statements. Now we see there's not enough cash to close. So now everyone around the table says, "Hey, we need a DPA." But then what happens? The transaction gets delayed. So in that case, the DPA wasn't the problem. Insufficient cash to close was the problem. The DPA was actually the solution to the problem, but could have been detected or anticipated earlier, and the transaction could have been done a lot better. So again, agents, work with loan officers who know the down payment assistance programs well and are able to close within their timeline. Now, this last issue is one of the most important in our opinion. So let's start with this. The most common question we get from real estate agents is, how do I find a loan officer that can help with down payment assistance? Specifically, loan officers that meet the following three criteria: that they offer DPAs to begin with, that they are good at DPAs, and that they want our DPA first time homebuyer business. Now, the problem is many loan officers aren't meeting this demand with the right message that they do offer DPA and that they are good at it. So let's break this down. So, first, from the real estate perspective, what can agents do? Well, it's important to talk to current loan officers, right? Ask a broker, ask peers for referrals, or even ask program providers who their best loan officers are. Like, a lot of program providers have a preferred list. loan officers that they've worked with time and time again that understand their programs very well. Um, let's not forget, it's also important for you to educate yourself on the programs available in your market. It's important to create relationships with partners, loan officers, and brokers that offer these programs. Talk with your state housing finance agency about their relationship with LOs and other real estate agents. They know who is offering their programs. Host a first time home buyer lunch and learn. Leverage your social media presence, right? Craft an intake strategy with realtor partners that are working with consumers in need of DPA. And honestly, court other agents as well that list and sell affordable and DPA eligible properties. They may have great loan officer connections and also insights into some of that inventory that we mentioned earlier. And now, what can loan officers do better? Well, they can also continue to grow their DPA expertise, right? Work with your product development staff to get access to the programs that you and your agent partners, and most importantly, your home buyers need. Also, host teaching and network activities, maybe lunch and learns with local agents and brokerages where you're discussing DPA programs. Get boots on the ground in your community, get active with local unions, employers, faith based organizations. It's also important to leverage your social media and be online where your agents are working. And definitely make sure you have an intake strategy for those new DPA buyers and your new agent partners. And of course, the most important thing, broadcast all of this to agents because they need to know that you are the local DPA expert that's ready to step in and help their buyers. So, as a quick recap, make sure you explore creative inventory alternatives to combat the myth that home buyers need 20% down to purchase a home. Leverage the value that DPA can bring to the transaction, both on the buyer and the selling side. Set these buyer expectations early on and prepare and create effective, innovative agent loan officer partnerships. Now, if you remember, we said at the beginning we'd give you millions of reasons to reconsider your objections and apprehensions about DPA. So, did you know that 33% of all declined loans are salvageable with down payment assistance? Now, that includes loans declined for cash to close, but also for qualifying ratio issues. Now, DPA can't solve credit or employment or property issues, but tons of declined loans could be saved if a DPA were identified to help with cash to close or debt to income ratios. And when a DPA is applied to those declined loans, we find an average of about 6% reduction in loan to value. Additionally, we did some research a couple years ago and found that about 68 million single family homes in the US qualify for down payment assistance. This was 87% of all available homes on the market. That is a significant amount of inventory. And lastly, through more recent research, we found that about 32 million renters are mortgage ready, but many don't think that they qualify. And why is that? Well, the 20% down myth, right? Or they think a student loan will kill their deal. So they're unaware of low first mortgage options or even down payment assistance programs, or perhaps some other misperception. Now, we always like to end our webinars with what we think is one of the most important lines ever, that DPA customers truly become customers for life. So we encourage you to tell their story, to help them, and they will refer their family members and their friends. In closing, please feel free to reach out to us with any questions. We are here to help you and your clients find the assistance that they need. We can be reached at info@downpaymentresource.com. Thank you for joining us today. We're going to be sticking around for a few minutes to answer some questions, but we greatly appreciate everyone's attendance today. See, to the team, Were there any specific questions, any things or anything, excuse me, to address? And open the chat here.
Yeah. Hey, Will, it's Mel. A couple of things for me. Thank you. We had an active chat today. There was some networking going on, which we love to see. And I am going to post a link in our chat to our Down Payment Insiders Facebook group. This group has kind of organically turned into a pretty cool networking group as well for agents and loan officers to connect because we hear that question all the time. Agents asking where they can find loan officers that do DPA. So I would definitely recommend you guys joining that group and checking it out. Secondly, we as Will mentioned up front, we did record the session. We will be sending that out along with the slides. So if anyone, we had some people with some technical issues in the front. If you guys had technical issues, don't worry. We did record. We'll send out the slides to everyone. And then we had one question. I will include this in the follow-up, but one question about income requirements and for programs. And although that is going to vary drastically by program, by market, by location, we had did some data recently, pulled some data, and had a research project with another data provider, and we found that about 62% of the programs in our database, and I hope I'm quoting this correctly. Don't hold me to this, guys. I'll include the article in the follow-up, but I think it was 62% of the programs in our database either have income requirements over 100,000 or don't have requirements at all. So, some of these just pointing that out to say some of these programs aren't quite as strict as you may think, and I think the narrative around them is changing quite a bit. So, a lot of them are not just for first-time home buyers, et cetera. So, anyway, just wanted to point that out because I saw that question come around, quite a bit about specific requirements for the programs, and I think everybody would attest that we're seeing that there's a lot more flexibility going on.
Thank you, Mel. Yeah, we I think recently had a really big article that I don't know what viral would be considered nowadays, but I saw it everywhere with I believe the Washington Post regarding down payment assistance programs helping that missing middle. Obviously, that's not where it's targeted, but that just shows you the array of programs and that spectrum of income limits that can receive assistance. So thank you for sharing that. There was a question. I work in the Kansas area. Do you know of what is available by states? Well, I'd be remiss. Thank you for the question, by the way. If I didn't mention our search eligibility tool on downpaymentresource.com. You can, run a search, picking a county there, any county really, if you want to look in a specific area in Kansas. And if you're not able to fill out some of the other demographic information, that should still yield a few examples of what programs might be available. Uh, so thank you for the question. Okay. Are there any DPA programs that are for families that happen to be non-permanent residents? Hopefully, that's a valid question. That is a very valid question. Thank you for submitting that. Um, I want to say yes, because we have seen those programs. And by that, I mean the spectrum of what citizenship would be defined as US citizen, permanent resident, non-permanent resident, and then obviously the various other options there. However, I will say that will differ based on funding source. I know that the administration has made some changes to their guidelines. So, even more important that as you're connecting with the program providers, you take a look at their guidelines, and all of that information is actually information that we collect as well. What citizenship requirements are to qualify for a specific program. So, great question.
Hey, Will, I just wanted to answer one
Yeah,
more too, and from
of
chat.
course.
The question was from Maribel. I believe, does your website offer DPA marketing services for $29 a month? I think you're referring to Down Payment Connect. I'm going to post a link to Down Payment Connect in chat, so you guys can have that for reference. Down Payment Connect is kind of like more like a lead gen tool, but there are marketing services that come along with that subscription. So just wanted to clarify that, and I'll post a link in chat just in case anybody's interested.
Thank you, Mel. Are there any deep, excuse me. Let's see here. If someone buys using DPA, can they rent out that property and how quickly? Again, thank you for submitting your question. So whether or not somebody can use the DPA to purchase a multifamily property is, of course, program specific. In that case, yes. But again, within those guidelines, sometimes there are stipulations as to who those can be rented out to. And by that, I mean if there are any income requirements, income limitations. And in terms of how quickly, I don't know that there would be a timeline on that, but the guidelines would say if um, they needed to be rented within a specific time. I do know that the owner occupant would have to occupy the property within a specific, probably number of days. Great question. Can DPA only be used for primary residence? Can be used for foreign investors? I do not believe I can say that with certainty that DPA can be used for any investment property purposes. Again, um, kind of a gray area, right? If you're an owner occupant purchasing a multifamily unit property, however, you are an owner occupant within that property. But no, they cannot be used for any um, just investment purposes in general, unless you're occupying the property.
Hey, sorry, Will, it's
Yeah.
it's it's me interrupting you again.
No, 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 no. Keep it coming. Keep it coming. What's going
Um,
on, though?
and anybody from our team, feel free to interject as well. But again, we get the question a lot of how to find loan officers that work with DPA. I have some recommendations that I always give, but if anybody else wants to add to this, my first recommendation is check with your current lender partners to see what kind of programs they may offer. Maybe ask around if you're an agent and ask around your brokerage to see if anybody else has any recommendations. But also another good place that I suggest people start is with your state housing finance agency. Every down payment provider is going to have their own, you know, approved lender list. I mean, typically they're going to have their own approved lender list, but your state housing finance agency provider, in my experience, those loan officers are going to be familiar not just with state programs, but with local programs as well. So that's always a good kind of broad place to start. But lastly, we've had some loan officers and lending professionals speaking up in this chat. So they're out there, I promise. In the Facebook insiders group that I posted a link to, which I'll also include in the follow-up to this session as well. We see some networking going on there as well. So just wanted to say, I promise they're out there. That there are loan officers that do these programs. You just kind of have to know where to look.
Thank you, Mel. Um, do DPA lenders know about all the options? Or does it depend on each lender? Also, can you stack these programs? So I'll work my way from the end to the beginning there. Yes, some programs can be stacked with other programs. Again, we collect some of that information as well. A lot of that depends on um, where they are willing to sit, whether it's second, third, or anything else. Some programs, of course, prohibit any stacking. So it really just depends on the program provider. And as to whether or not DPA lenders know about all options or does it depend on each lender? I think that's lender specific, right? Some may operate across the country, some may only operate within their specific market. So it really just does depend on them and their product managers and what they have approved. Great question. Let's see here. Oh my God, this chat is awesome. Okay, as a realtor, can we partner with DPA programs? I was told it's a conflict. Um, I, I would like to go to the team here. I don't know of any um, specific conflicts that you would have with using a DPA program. I mean, have we heard from any realtors about something like this, Mel or Lori?
I I mean, I can't say that I know the only thing. If you are a part of a broker that has their own lending partner, then perhaps there would be an issue there. Oh, I see someone, you cannot represent a buyer on the loan and FHA loan. Yeah, I'm afraid I'm not quite as knowledgeable as maybe I should be about that piece of it. Um,
I'm wondering if they mean like if you're what like a licensed agent and a licensed loan officer kind of thing. So, Lori, I see that you turned your mic on.
Yeah, I was just gonna say, we're talking about the some programs allow not, is that what the question you're referring to?
It is towards the bottom in the chat, and it says, "As a
Oh,
realtor, can we partner with DPA programs?" I was told it's a conflict.
as a realtor, say that one more time.
As a realtor, can we partner with DPA programs? I was told it's a conflict.
Oh, I don't know why it would be. I mean, you can, I don't know. I mean, I refer people to use if they can use a down payment assistance program. I don't see that being a conflict. I'd see that servicing my customers. Oh, I see. I was looking in the Q&A and it's in the chat. As a realtor, can we
Yeah.
partner with DPA programs? I was told it's a conflict. Yeah, I'm not aware that that it is a conflict. Sorry, my phone is ringing in the
Okay. And I
background.
saw, no. Thank you. I appreciate it. I saw them follow up again. HUD office told me they couldn't refer buyers to me. Okay. I think that might be like a steering policy where they can't specifically say, hey, go to this person. But, you know, if that's what you're referring to, then yeah, they can't steer one of their clients to a specific provider.
yeah. And Brian makes a good point too. I think if that was the question, if you can be the loan officer and the agent on the deal, then that's a no.
Right. Yeah. Okay. I
Um,
love this chat.
I
Awesome.
know. We have all the
Yeah.
smart people in our chat today. Thank you. Um, I did want to address one more too. I'm trying to find it because there's been, how long does it take for a buyer to get certified for a DPA program? I mean, Will, do you want to speak to that part?
Sorry. Where was that question? Okay. I apologize.
Um, how long does it take a buyer to get certified for a DPA program? I assume they're just asking
Oh,
about
gotcha.
like homeowner, like education.
Gotcha. Yeah, that is funny enough. I've been speaking to a lot more providers lately that are really asking for buyers to come get their housing pre-purchase counseling done, really before the loan kind of gains any movement. And of course, I'm not saying that is written in stone, but the point being, because every prospective buyer is different, every situation is different, they really want to go through their financials with them to see just what exactly they would qualify for. Because just because a program may offer max assistance doesn't mean that home buyer would qualify for that full amount. It really just depends on the financial picture. So that is a great question. It's great to just start with reaching out to the provider, asking what the application process is, if there's any pre-purchase counseling that's required. Many of them will say yes, and so it's good to refer the client or the prospective home buyer, I should say, at that point. But it timelines really vary. Some uh, don't have as many requirements. Some mirror the same requirements that they would undergo, filing a mortgage application. So every provider is different. Let's see.
Um, I'll address Eduardo. If you're asking how do we know if funds are available, if you're searching from our website, we do note that. So we have the most fabulous team that keeps up with these programs on a regular basis. We keep them as updated as we possibly can. And so if you're searching for programs on our site, we'll note programs that are not available or programs that are active or temporarily suspended, etc.
Thank you. Okay. I will say if there was anything that we were unable to get to today, again, feel free to submit any questions to info@downpaymentresource.com. We appreciate everyone joining us here today. You can keep up with us on downpaymentresource.com through our education tab, but also, take a look really at our suite of services. If you're not a member of one of our partner MLSs, please take a look at what Down Payment Connect may be able to offer you there. Another great resource in terms of what you can do with marketing outreach and just connecting with buyers. So, yeah, a huge thank you to everyone. This is always our favorite part. We wish you all a great rest of your day, and we look forward to connecting with you next quarter. Thank you all.